They've got $250 million. Sam Hammond calling it on the nose. $250 million above the analyst estimates. We won't hate the analysts for that. They underestimated the numbers. So Twitter is still showing sequential growth. I think that the estimate was notable because the analysts were predicting that there wouldn't be sequential growth. There was $250 million in revenues. And looking at the numbers as they're just crossing right now, they're saying the adjusted net profitability of $183,000. So barely profitable from an operating standpoint on an adjusted level. But I think we'll have to look at what the adjustments were. This is a time just after an IPO when there are so many non-cash stock compensation charges that I think it can be appropriate to go with pro forma numbers. We see other companies abuse that. I don't think that's the case here, but I'll look into the details as they cross. So basically break-even quarter and revenues at $250 million, still showing some growth. And users, then as Sam pointed out, that's the number that people I think is really important for this stage of this company. 255 million in terms of users. As I look at my model here, that shows a 6% increase sequentially.
Are we happy with that? 6%?
No. The whisper number to beat was 260 million.
And it looks like the mobile monthly active users are 198 million because obviously there's this big shift to mobile, right? So
yeah, they're pretty much all mobile as it is. The 260 million monthly active users, that was the number to beat. If Corey's saying it's 250 something.
255 million users. And you said that the whisper number was for 260. I've made the point, it's just, it seems to be very anemic growth.
You know what?
So if you're not getting enough new users signing up, where's your business?
The problem with Twitter is it's a momentum name without the momentum.
Yeah. Yeah. I mean, people are paying up for some growth. Go ahead, Corey.
Sam's talking about the stock. I'm talking about the business here. And I think that one of the important things, look, the thing that we saw going into the IPO, and I personally was surprised after the IPO, is the user growth slowed down and slowed down and slowed down. I would have thought at the very least the IPO would have given them a boost because they got so much attention for the offering. But what we see now is that the user growth slowed from 7% to 6% to 4%. Well, now it's picking back up to 6%. So maybe they figured a little something out. A reacceleration of user growth is what they wanted. Sam's pointing out some people were hoping for more. They got a little bit of a reacceleration, though. They got basically 200 basis points of reacceleration here, and I think that that's a good thing.
Yeah, I mean, okay, so let's see how the stock is faring right now. To get back to Sam and the stock for a minute, it looks like it's down 6.25 here. Look, there's been a big sell-off overall, right, and a lot of big tech names.
And Twitter especially is at an all-time post-IPO low. So the only thing it had going for it was that expectations were so low. It's not trading at an all-time high. It's trading at a low. My prediction based on these earnings is tomorrow it's going to set a new post-IPO low.
Wow. What's the problem here with this? Why aren't we seeing more people sign up for it, a bigger increase in monthly users?
You know what? It's not the easiest service to figure out for a lot of people. Yeah. I mean,
I'd agree with that.
It really isn't. And so the big worry, the hope before the IPO was that Facebook is 1 billion plus users. Twitter could get to close to that. And instead, we're feeling like it's kind of topping out at just under 300 million.
It feels like sometimes it's information overload. Now, there are things that I like about Twitter a lot, and I'm very active on Twitter, but it's a very different experience, say, than Instagram or Facebook.
Yes.
And it's, to your point, maybe not as user-friendly. You kind of got to be in the know. You got to be an active Twitter user to really have it work for you.
Doesn't it go back to the problem, the initial problem with the IPO, that there wasn't really a deep understanding of it, or that it wasn't what people made it out to be? That is, maybe it's a good business, it's a sustainable business, but it's not a Facebook. It's not the same thing. And people bought into it initially, wanting a little piece of that magic, right? If it had to do with the internet, they were going to buy it. It didn't matter exactly what it did. And now that it's becoming more clear what exactly it does, the bloom is off the rose.
It was social and mobile, which were hot, but it really feels like a niche service.
Yeah, here's what I would ask, too. Is this a company, Corey, that just went public too fast? I mean, you think about Facebook, it was around a while before it accessed the public markets. Twitter saw it Facebook go public and almost seemed to rush to the market so quickly. Should they have waited?
Well, look, they're different companies. They're coming at, both companies enter the public markets with their growth rates slowing quite a bit. That's usually the time these days when companies go public. Understand that when tech companies went public, 10 years ago and well before that. They went at the very earliest stages with very small offerings from banks that weren't based on Wall Street, but banks that were based out here, where you'd have tech-focused firms bringing small tech companies that thought they could become the next Apple. Indeed, Apple was a very small offering by comparison. What we see now is that we've got these big New York banks, Morgan Stanley, Goldman Sachs, and so on, bringing public these much more mature companies where they see slowing growth rates, and that is the time of the offering. Now, maybe people get a little spoiled when they saw companies like Google, admittedly 7 years ago, or Facebook in the last year or so. We saw those companies come public and re-accelerate their growth. But we might expect that the kinds of IPOs we've seen, the kinds of technology companies that have gone public in the last 2 or 3 years, are a different stripe, and that their best growth days are behind them.
Best growth days are behind them? I mean, so where does that leave the valuation on this company?
Well, look, IPO investors invest in IPOs because they want the company to take risks. They're not looking for a stable, predictable company. And the problem is, compared to Facebook, you may disagree with the WhatsApp and the Instagram acquisitions and the Oculus, but they're taking chances. They're a $150 billion company that acts like a startup. Twitter's not acting like a startup. They roll out features very slowly.
Yeah, all right.